Hey all, welcome to Billionaire, and I'm going to bring you a very exciting learning video where you all can benefit. Now, what are we going to learn? We are going to learn the magic of 200 period simple moving average. Now, before you turn your face sore, please understand that all the indicators are lagging indicators, but there's a magic. Once you know the secret of these moving averages, you should be able to understand what I'm going to teach you. Now, you also need to understand that market moves because of buyers and traders collective decision. They don't move because of moving averages or pivots or Fibonacci or whatever indicator it might be. Now, and market, to understand this market, we use price action and we use a lot of indicators to gain an edge, because market is a probability. What do you mean by probability? Means you have an equal chance of winning and an equal chance of losing money. So if you, that's the reason why we keep advising to use stop loss. Now, this is how much I made today. Now, why I'm showing this is you all know that I'm a pivot price action trader. Now, where is this moving averages coming from? You know, I mix pivots and moving averages, but this is dedicated to moving averages only, so that you have a better understanding, and then you can use these very confidently in your day-to-day trading. Now, that is my objective. Now, what do you mean by 200-day period moving average? Why it has got so much of significance? We are not talking about 100. We are not talking about 300, 150. We are talking about 200. The blue line is the 200 period simple moving average. Now, the reason why I'm telling this is, please be a little patient. Do not lose patience. On a 5 minutes time frame, this 200 period simple moving average is a daily pivot. And on a 15 minutes time frame, the same 200 period moving average is the weekly pivot. And on hourly time frame, the same 200 period moving average is monthly pivot. Understand, this is the pivot, the central pivot which we talk about. You need to understand this. And what is the significance of 200? Now, you know, since it is a pivot, so we know it measures the trend: upside, selling, downside, buying, and it acts as a support and resistance. Now here, whenever market goes below 200, you can see a very sharp move. See here, it's in a downtrend. It goes above 200, you can see very sharp uptrend. I'm talking about Bank Nifty, and our trading time frame is 5 minutes only. All right, just so that you are aware of. See here, whenever. So in index trading, now this plays a significant role and gives you an edge when you add 20 period simple moving average. The red line is the 20 period simple moving average. Now you know that again with 20 period, what is the significance? Why are we not using exponential? Why are we sticking to moving averages? Some people may tell, why are we not using BWAP? Why are we not using volume profile, etc., etc.? In the simple terms, as you all know, certain things work because buyers and traders respect them. Majority of people respect them across the globe. So there is no significant advantage with EMA or moving averages. So hope that you understand it. And am I the first person to introduce this? No, definitely not. I have learned it from some other person. So Oliver Velez is the person probably whom I know who made this method very, very famous. So I have taken this particular technique from his books, his videos, etc. So the credit should go to him. But I am sharing this so that you people can understand the depth of it and start using it. Right now, I have tweaked a bit with 50-day simple moving average so that you can understand. I will share it later. Now 20-day, same thing. About 20 buy, below 20 sell. Now when do we have an edge? The edge is when the 20-day simple moving average crosses the 200-day moving average. You have a trade trigger, and it works to your advantage. See here, 20 period comes down below 200. Even if it is on Friday slightly pull back, today it was a gap up, it kept going down. Right, it was a very tough day, but I'm just showing you If you are on the right side of the trend, you won't lose much. Similarly, I want you, same thing, right? I have shown you the video how 20 and 5 diverges from the auto pivot and how it can be used for swing trading, right? It's a similar thing. The 20 period and the 200 period simple moving average comes close, breaks down. You have a boom, you have a big money there. Same thing goes up, you have a very big money, explosive moves. Now, in this situation, why should we use 50-day simple moving average? The 50-day simple moving average is for the people who wants to trade both side, right? In 50 days, what universally we consider 50 as a balance, right? So in simple terms, 50 is a balance. Above 50 is buy, below 50 is sell. So we try to see balance, and price action traders on professional traders see 50 period as a balance. So above 50 is buy, below 50 is sell. Again, it is the buyers and sellers making the decision. It's not price moves because of this moving average. People see these moving average, make the decision. That is why they play a significant role in trading. I'll show you how. Now here price has gone very far. Now you have a sharp fall. You see this hanging man pattern at the top. You know this red bar is closed below this green bar. I'm going to make it big for you. See here. So you know it's going to go down. How do you know that it's going to go down? Because about 20, about 200, it's a buy. Now, a lot of new traders might have this confusion. That is where this counter trade opportunity comes, right? This is the 50 period. Nothing else. Please remember, I'm not asking you to buy. It is counter trade. Counter trade means we are in an uptrend. The market is very far away from the 200 period moving average. It's a mean. This distance should alert a professional trader that there might be a correction. There might be a pullback. So in that pullback, some professional traders will see the price action like this. It's a resistance, near resistance. We're having a hanging man. Okay, we have a probability to go short, keeping stop loss above this. Now this 200 period, same thing, like 20 period moving average, moving or breaking above 200 or breaking down. Same strategy, very simple. When 20-day moving average breaks below 50-day moving average, you have a counter trading opportunity about the previous swing high. This is where the 50-day moving average comes into picture. All right. I'm going to show you one more example so that you guys are clear. So it's in an uptrend. See, it's in an uptrend. This is 18th. Market went sideways, sideways, sideways. 20 and 50 are converging. This candle closed below 50. So this is your trade. Your stop loss will be about this. And you can go ahead and make the money. Now, what should be your target? Your professionally target will be 1:2, 1:1. So since it's an explosive move and we're talking about Bank Nifty and Nifty index, right? Whenever you get an explosive move, similar to the pivots, you need to consider price. Smart money is moving. So what are the pivot levels where smart money will enter or the breakouts will happen? Outside the previous day range, above R1, below S1, previous day high, previous day low. What about candle pivots? Above R4, previous day high, below S4, previous day low. These are the levels where we consider breakout, right? So you can consider these as breakout. Now see here, this is the whole 16th. I'm marking the level from here. This is 16th. 16th morning, price just zooms up. All right. I'm going to mark the entire range. So you know this was the breakout below 50C. It's going down. The market has pulled up and gone into a range. What range is this? Till 13th, this is the 2-day range. Right? Now what happens here if I cover this range? This is 18th, 17th. Above previous day range, I'm talking about this above previous day range. This is 16th. Market briefly tests. So you see here 20 and above 200 and market just booms above previous day range, market always have uptrend. Now you can use pivots, you can use candle pivots, or you can use moving average. The simple price action is market moves whenever price is above or below previous day range. And one more thing you need to understand here is, since I have showed you the 50 MA, now if the 50 MA and 20 MA carry same characteristics, right? They're pretty close, around 30 days, they are 30 period difference apart. Above 50 buying, above 20 buying, below 20 selling, below 50 selling, right? In a month you have 20 days, people calculate that. Sometimes they use only that, you might have seen, along with some other momentum indicators, and some people use 50. Now since these two carry same characters, if character sticks, and if they are moving in the same direction, especially moving above the 200 day at the opening, and if they are running parallel to each other, the trend is very strong. You need to consider trend is very strong. So this is one tip where I wanted to show you. I'm not going to jumble this up. Very simple. I don't want you to add volume. I'll add this. If you understand probability, as I explained, there are equal chances of win, equal chances of lose. Whether you add volume, still you can go wrong. Whether you add any RSI or any other indicator, still the trade can go wrong. Use the strategies in its purest and simplest form to get the edge and make money. So you can just use this and make money with the price action bars. And hope you like this video. Please do share, subscribe, like, and comment. And I'll be very grateful to bring more videos to you based on your likings. Thanks a lot. Have a good day.